All right, so I'm back. I wanted to put together a little strategy video for you about my strategy going into the live account. So now that I'm live, I needed to reflect on my trade plan and my strategy, which are, a trade plan and a strategy are two very different things, and they need to fit each other. If they don't, they're not going to work. So I've been trading for the combine, then I traded for the XFA, and now I'm trading for the long term. Those other ones were short term. I can reset them, stuff like that. Now I got to trade for the long term and look at long-term successes, long-term data, long-term statistics, and what I want my days to be like for the next year, right? Do I want to be trading all day long, or do I just want to be trading for 15, 20 minutes a day or an hour a day? One thing if I'm trading all day long just so I can get through a combine, in a week or two or whatever. It's another thing if I'm going to have to trade all day long for the next year. That I don't want to do. So it's time to reflect, figure out if my trade plan still fits, what adjustments need to be made, and then does my strategy still fit my trade plan? So that's what this video is going to be showing you, is that I've made adjustments to my trade plan, and now I'm putting together a strategy that fits that. I'm going to share with you my strategy. I'm going to put out another video at another time about strategies and trade plans, because they are two very different things, and I don't see how a trader can be successful if they don't know how to build a winning strategy that fits a proper trade plan. If you don't have that, I don't think you can be successful. Like a long time ago, Thinkorswim did this competition, not Thinkorswim, TD Ameritrade did this trader competition. There was over 100,000 traders that entered, including myself, and I finished 2%. It was like 2,300, like that was my place. And there was like a 2% marker, and they sent me a lighter. The winner got $1 million. The rest of us, like in the top 10% or something, got like a lighter. And then everybody else, I don't think they got anything. They got like a letter of participation or something like that. I finished in 2%. And when I did that at that time, I was a terrible trader. Like I was not making money in the market. I was losing everything. And I was in a 2%. So when they say traders, like, only 90% of traders fail, I think it's a lot higher. I think it's like 98% of traders fail. But the reason why I think they all fail is because they don't know how to make a trade plan, and then they don't know how to make a strategy that fits that trade plan. When I figured out the proper way to make a trade plan and then how to make a strategy that fit that trade plan, game changer. All of a sudden I became successful in the markets. That was the key for me. So I'm going to try to make a video about that another time. I would take like way too much of the time in this video. It'd be like forever long video. So I might even have to do that in several parts. But before we get into my strategy, let me show you what I'm looking at so you kind of understand what I'm talking about. So on my monitors, on my one monitor, let me show you real quick here. My left monitor. On my left monitor is the trade window that you look at when you see my trades happening. I have NinjaTrader as my charting thing. And then down in the bottom two boxes here, I have my Topstep information. And then I have the market clock going on over here on the right side, because I trade based on candles closing. So I want to see when those candles are going to close so I know when to hit the button to get in. On my right monitor, I have my Thinkorswim up. So here's the three tickers that I'm trading: NASDAQ NQ, GC Gold, and YM, the Dow Jones. So this is what I'm charting everything off of. I'm looking at this, figuring out when I want to enter my trades, when I want to exit my trades, and things like that. So that's all my strategy stuff takes place over here. And then what you see in my normal upload videos is my trade window. This window is my strategy window where I have my charting. So I do all of that through Thinkorswim. And then on my third monitor is where I have basically I have these four windows on my Thinkorswim chart that kind of give me a pulse, I guess you could say, of what's taking place. So up here I have the 1 minute chart, which reflects what's going on if I'm trading on the 1 minute like an NQ. But if I'm trading on the YM or GC, which I'm in the 5 minute, it kind of gives me a zoomed in look at what's happening, minute by minute. Then down here I got the 5 minute candle. And when I'm trading NQ on the 1 minute, this 5 minute candle gives me that little bit more zoomed out view. And then I have the 30 minute and the daily. So I kind of look at all these, and these don't determine whether or not I'm going to get in. These don't determine whether or not I'm going to get into a trade, but they help me understand if I should sit in a trade longer to try to squeeze some more profit out So if I'm short the trade, for example, like right here, and then I have a red candle breaking below this green candle and breaking below this green candle, and it's about to hit my target, that tells me that maybe there's a possibility or probability that there may be some more downside move to go here. So maybe I need to think about trying to squeeze some more out of this trade. Protect my profits, of course, but try to be a little more patient with it. So I can learn a little bit like that from the 30-minute candle. The daily candle basically gives me the same kind of information, what's happening on the daily candle. And all this basically is subjective. It's subjective. There's confirmation bias that goes into all this stuff like that. And that's kind of like the discretionary part of my trading is, do I try to get more than my target has told me I could get out of this trade? Okay, so let me zoom into the YM chart right here so I can tell you a little bit more about what I'm looking at as far as the discretionary feel good type stuff. We'll jump into this 30-minute chart. Okay, so the top window right here, we have YM on the 30-minute candle. Then this box down here, this is the MACD with the regular settings. Nothing's changed on it, MACD. And then this down here is my custom indicator for permission to get into trades. So right now the MACD and my custom permission indicator are in agreement with what's going on with the bearish sentiment that's taking place. So if I went long on this trade because I'm going by probabilities, and then I end up getting, stopped out for my long right here, which then triggers my speed bump. So now I'm short in this trade and I'm writing it down short. I can look at the MACD and say, what's the sentiment right now? Is it really bearish? Like really, really bearish? And right now it is. You see the separation between these two lines on the downward slope. Nothing's curling up to reconnect. All that stuff. We're back into bright red candles here. And then I look at my permission indicator. I'm like, wow, my permission indicator is showing heavy bearish as well by the big separation between my dashes and this line here. And we're below the red line. So that's showing really, really bearish sentiment. So then that tells me, man, when it gets to my target, I should probably be patient and see if I could squeeze some more out. Maybe get another candle out of it. I'm trading on the 1 minute or 5 minute with YM. These are 30-minute candles. So as it gets into this target, I'm like, this might have another 30-minute candle down. So I literally could almost double my profits looking at it. Now I'll trail it down. I don't want to, things can turn around quickly. So I don't want to stay in it past my welcome, if you will, and give back all my profits. But it does let me know that maybe I should look at trailing it. So I also use the MACD and I look at my permission indicator as well to see if there's more opportunity in the trade. So I use this monitor basically as a pulse and to kind of give me an idea of whether or not I should try to get more out of the trade. And that happens occasionally as well. But in a nutshell, my strategy tells me when to get in and when to get out. And this monitor just kind of gives me the feel good of like, oh, just be patient. That retracement's normal. This is happening. Don't worry about it. Or, hey, squeeze a little more out of this trade because you might have some opportunity to make a couple dollars more. So that's what's happening on my third monitor. Okay, so now that I've got my Thinkorswim chart up here, let's talk about my strategy. So my new strategy that I'm using to fit my new trade plan is still the simple switch trading method. So there's a link in the description if you want to learn more about that. Or you can go over to simpleswitch.teachable.com. So with the simple switch method that I'm using, it basically removes subjective viewpoints and confirmation bias. Like when I try to trade with technical analysis and things like that, it's been a disaster for me. Like I've just never been able to be successful with it. And I needed something that would let me trade more like a robot and get rid of all that confirmation bias and subjective viewpoints and everything like that. And I found that with the simple switch method using the simple switch indicator. The simple switch indicator tells me where to put where to get in the trade, tells me where my target is, and it tells me where my stop is. So I don't have to think about it. I just got to wait for the switch to take place in a nutshell. And then it gives me all the information I need, and I just follow along with it and do that thing. I know what I just said is pretty basic and simple. It's a little more complicated than that for the strategy part, which you'll learn more about in just a second. But in a nutshell, that's what I was looking for. I was looking for something to tell me, when do I get in, where's the target, and when do I get out? That's what I want. I don't want to have to do all this other thinking. I just want to look at the chart and let it tell me what to do. So that's what I was able to get with the simple switch indicator. So when I was trading this in the XFA, I added a lot of discretion to the simple switch method and indicator. And I did that for a couple reasons. One of those was that, like I said, this is a game to me. So, I got past the combine and now I want to get past the XFA. What do I think that they're going to want to see to get me into a live account? Well, if I can have every day is a green day, I never have any red days, that should get their attention. And then if I can have, 80 to 90% success rates, that should definitely get their attention, especially when I see on Topstep TV when they talk about 60 and 70% win rates. 60% win rates a lot. So if I'm doing 80 to 90, then that should do it. And I was able to get 90 plus percent in gold, 90 plus percent in the Dow Jones, and 70 something percent, 77% in the NASDAQ, with an average of like 81 or 82 when you put them all together. And now it's over 100 trades. So those, it's easy to get a 90% win rate when you got 10 trades. But when you have over 100 trades, that's a different story. So, I was hoping that that would get their attention. So discretion is where I use that to try to get through my XFA as quickly as possible into a live account by showing the risk managers at Topstep that I can trade with high percentage rates on the daily win rates and the individual trades. And on top of that, I showed them how I can slowly grow an account responsibly from like $200 a day up to $1,000 or more per day. So, if I just jumped in and I started hitting big home runs, and that could look reckless and it could also look lucky. But to show a consistent slow growth of an account with those same numbers over a huge metric of trades, I thought that would provide a lot of, credit and merit to be able to go to the live account. Now, by doing that, though, I did sacrifice a lot of profit. I could have made a lot more money in the XFA, but I wouldn't have had as good of metrics. So my thought was, what do they want to see over Topstep? They just want to see people throwing down big dollars, or do they want to see the other data? Does the other data hold more weight than just throwing down big dollars? So my thought was that the other data would be more important. So I used a strategy with my trade plan that allowed for a lot of discretion in order to achieve those goals. And I was able to do that. Same simple switch strategy, basically same simple switch trading method with indicator, little different strategy, like I said, and a lot of discretion. But now I'm going into the live account, which is a long-term thing. And now I don't really care about those numbers as much. What matters to me is slowly growing the account, having, I'd like to have green days every day, but I don't care if I have a 70% or 75% win rate on the day. With my strategy, as long as I have, above 70% win rate, I can be successful, especially if I'm having green days every day. That's what's important. Along with other things, like I don't want to be sitting at the computer all day long. I want to be in and out of my trades quick and easy. I don't want to have to sit here watching what's going on. And when I'm using discretion, I got to pay attention. But if I'm not going to use discretion, then it's a lot easier to set it and forget it, walk away, do other things, come back and see what's kind of going on. So I needed to be able to remodel my strategy to fit my new trade plan. So that's what I'm doing now. And just so you know, like I'll constantly build new strategies. Like all year long, as things in my trade plan change, I build new strategies to fit it. So I don't think I've ever kept a strategy for more than maybe 4 or 5 months, maybe the longest 5 months, something like that. So my strategies are constantly changing because they have to fit me, and I'm constantly changing. My interests are constantly changing. Let's say I travel overseas and now there's a new time zone that I'm working in. My strategy might not be good for that time zone. So let me make a new strategy that fits the time zone I'm going to trade in. Having the ability to be flexible with your strategy by knowing how to build strategies, you can constantly build them to fit you. If a strategy doesn't fit you or your trade plan, I don't think it can work. That's why I'm against buying strategies from people. I think if you buy somebody's strategy, it's a recipe for disaster. If you do it because you just kind of want to get an idea of what somebody else is doing and it's not for you to copy, you're just wanting to get an insight look into, a strategy, that's one thing. But if you're buying someone's strategy to copy it, I don't think you're going to make it very far with that thing. I mean, it might work for a little while until it doesn't. And then what are you going to do? So yeah, I'm totally against buying strategies. Learn how to build your own and learn how to make your own trade plan. And most people who sell you a strategy are not showing you the trade plan that strategy was built for either. So that also is like defeating right there. So one of the things that you saw me do with my strategy in the XFA and in the Combine is there was times where I would get into the trade right here and then, it would go up a little bit, it would stall out, and I would get out of the trade. I would get out. So, but when that trade started, I was risking maybe $500. and I got out making $100. So, you do that 5 times, with an 80% strategy, you do that 5 times, you made $100, and then the one time you lost 500, you're back to where you started. 80% strategy, that next 5 times is probably going to happen again. And now you're going nowhere. And then the emotional game can come in and start to defeat you. And next thing you know, blowing up an account. So it's really important to know when you can get out of a trade or when you can try to protect your profits. Because, doing what I did in the XFA to protect my profits and my probabilities and my win rates and all that stuff, like I said, playing the game, could be a dangerous recipe for disaster if I play it wrong, because I'm risking way more than I'm taking home in a trade. And I need my trades to be able to, my winners to pay for my losers. So if I'm only winning $100 and I'm losing 500, I'm not gonna survive very long. I'm gonna slowly bleed to death in that account. If I try to do that for like a year, there's no chance. Like, I bleed to death for sure in the markets and the account blows up, guaranteed. But to do that for a week or two, I probably can get by with it. But to do that for like a year, no chance. And now I'm going to the live account, and I'm going to trade this account for a year, probably, or more. So I want to make sure I'm successful in it. And getting out of my trades early, where my winners will not be able to pay for my losers, is a recipe for disaster. Fortunately, I had good discretion, I had good weeks, if you will, in the market. So I was able to do that, get the numbers, have 16 days without any losing trades and all that good stuff. And it worked out great. But for a year, not going to happen. So just think about that with your strategies, traders. Like, are you getting out of your trades early and then you don't have the winners to pay for the losers? It's okay to get out of a trade early if the market's telling you to. If your trade plan and your strategy says, I need to exit when this thing happens because the proven statistical probability says I need to, then that's fine. That's the deal. But if I don't have a proven statistical probability telling me to do it, then why am I doing it? So if I'm doing something without a proven statistical probability of success or reason, then to me, that's a casino trade. So you'll hear me every now and then, say, oh, I got in that, I made some money on that casino trade. And that's because I didn't have that proven statistical probability of success. And I'm not talking about statistics for like 5 days or a week. I like to go back 90 days if I'm trading on the 5-minute candle, or at least get close to 100 trades if possible. So 90 days or 100 trades. So if I'm on the 1-minute candle and I'm taking 4 or 5 trades a day, maybe I go back 30 days on it. But I want to see that metrics high enough to be able to give me good data. If I'm trading on the daily candle, then I'm going to go back years to see what the statistics bear out, because that's really important. If I'm not trading on proven statistics, then to me it's a casino. And then the emotional game comes into play because I'm not really sure what's going to happen. I don't have the confidence and all those other things. But when the data shows me 1 + 1 = 2, then I can get into each trade feeling pretty confident about it. All right, so let me show you my strategies. I could easily talk to you for hours and hours about trading, but you're here for my strategy to find out exactly what I'm looking at when I'm making my trades. So let me show that to you right now. So I'm still trading, like I said, gold, the Dow Jones, and the NASDAQ. The YM, the Dow Jones, is pretty good success for me. My new strategy with the new setup going forward is this. It's simple. I have my simple switch indicator here. I'm trading on the 5-minute chart, and I'm taking the second switch of every day. So the gray, the black area is the normal trading hours, 9:30 to 4:10 roughly, is what it's showing right here, 4:15, 4:10. So this is the window that I'm going to trade my day session in. This dotted line is showing what happens. It's basically the next day opening at 6 o'clock. So I'll trade the evening session as well once that gets crossed over, and that's some different rules that apply to the evening session. So for the daytime session, I'm trading the second switch of the day. My simple switch, the simple switch indicator I'm using, I can make adjustments to this to give me different data sets. So the second switch takes place when the candle's closing on that switch. That's my entry. I use a tool in Thinkorswim. It's this little markup tool right down here, this little bar thing right here. It's called the quadrant lines. So here, let me erase this. Right click, remove. So basically, this is how it looks when this is switching. And as this is kind of thinking about switching, I can mark it up real quick. I can go from where that box was to where the switch took place. And it's not confirmed yet. It's just kind of moving around doing its thing. At anywhere in here, it's doing its thing. So once I I can mark it up real quick like that. And then the spacing between these will always be the same. So I can then go ahead and say 584, 487, use the calculator, and then see what the spread is there, almost 100 points. So, YM 100, it moves $5 for every dollar is what you get. So with 100, it's about $500 trade right here on this 5-minute candle. So then I can ask myself, is that too much for me? Should I skip this trade because I can really only risk $200? Or am I risking $1,500? So I need to buy 3 contracts instead of 1. So I can know that before I ever enter the trade. And the reason why it's really important to know exactly what my risk is before I enter the trade is so I know how many contracts to put on, or should I even skip the trade because it's just too much for what my account can handle if this goes against me. So really critical information to have, traders. If you have a strategy where you don't really know how much you're going to risk before you get in the trade, you're in trouble. Or if you have a strategy that you jump in the trade with 5 contracts and then you put your stop right here because you don't want to lose more than that, right? Like if this gives you, say, 1 contract, if you get in, you're like, oh, I don't want to lose more than $250, so I'm going to put my stop right here. Well, that's also a recipe for disaster because the stop needs to go where the market dictates. And the reason why you know that is because you have a proven statistical probability that says once it crosses that level, chances are this thing's selling off and you're in it in the wrong direction. If you don't have a probability that going back up with a huge aggregate number, that once it crosses there, it's probably going the wrong direction, that's why your stop should be there, then you're probably setting yourself up to fail because now you're just guessing, right? It becomes a casino trade at that point. You really don't know what's going on. You're just kind of winging it. So winging it, you can get lucky for a while, but it'll catch up to you over time. So really important to know that. So by having this thing move and switch and do its thing as before the trade even sets up, it gives me a snapshot so I know exactly what I'm dealing with so I can get in. So then once it closes, I'm going to right click and remove this real quick. Once it closes, I'll go to the center of this box and I'll bring that center line, that orange line right here, to the top of that, or to the close point of that candle. If it was short, like over here, I drag it down, same thing, to where the close of that candle is. And I'm entering in that trade. Usually I'm buying and then I'm remarking up the chart so I can get accurate numbers, but I can get a good idea. I know what the spread's going to be. That doesn't change. It's just, where do those numbers fall? Is it really going to be here? And is it really going to be a little higher? Is the target a little higher and the stop's a little higher, kind of thing? That can be a little different once the trade closes, but the spread is roughly the same, almost to the penny. So now that I'm in the trade, it comes up, hits my target, I'm out. I'm out. But I don't like to just hit close, and I usually don't like to leave my limit order right there. As you can see, a lot of times I like to try to trail my stop up. So when it backs up, I get stopped out. And that's where I'm looking at that quadrant screen, that pulse screen, if you will, to see, should I just leave my limit order there or should I try to squeeze more out? And I'm kind of getting an idea there. I don't need to do that. I can just play straight probabilities here and not worry about it. But if I want to make, at the end of the year, if I can make an extra $20 a trade, $30 a trade, and you do 1,000 trades, that's a lot of money. You can take some pretty nice vacations or buy a car with those extra little squeeze outs kind of thing. And it's at the same time, if I have a trade that goes against me and there's some slippage and I lose a little more than I'm expecting, those little extra bonuses, if you will, kind of help cover those costs. So and then I got my stop that's there. And then, sometimes I'll speed bump that depending what's going on. So anyway, so there we go. So that's YM. Basically, that's what I'm looking at right there. Let me show you one more piece to YM. Okay, so here's a failed trade in YM. So basically, taking a second switch. So there's the switch. I could take the first switches, but then I'm looking at like a 74% success rate. Whereas taking the second switches, I'm in the 80s, 85% success rate, something like that. So right here is the switch. And then once it starts to, it doesn't hit the target. If it gets 75 to 80% of the way, I'm going to move my stop up to break even plus a couple dollars. Because once it gets there, if it doesn't push that little extra bit through and it comes all the way back down to my entry, chances are it's rolling over. So the probabilities are not in my favor anymore. So I'm going to go ahead and just get out plus a couple bucks. But once it comes down through and it hits my stop, then I'm going to reverse my trade. I call it a speed bump. It's a speed bump on the way to profits. So I thought it was going to go up and make me money, but it's a speed bump on the way to the profits. So I reversed my trade, and then I double or triple up my contracts, and then it comes back down, and then I'll make that money on the downside, and that's fine. So basically, when a trade sets up with YM, I feel like I'm going to make money no matter what. The question is, how much am I actually going to make? And is it going to be, what direction is it going to be? Is it long or short? I don't know, but I'm getting in long to start, and maybe I make the money on the short side. So that's kind of how it works with the simple switch method using the simple switch indicator. Okay, so with the NQ, the NASDAQ, same thing, simple switch indicator. And I'm trading on the 1 minute candle. There's a lot of trades that take place during the day on a 1 minute candle. But the problem is it can get really choppy and it can get chopped up pretty bad, especially if I'm going to be speed bumping it. Big chop is good, but little chop, not good. So I'm basically going to trade it from 9:30 until 10:15. After 10:15, I don't want nothing to do with it. If I need to, because I got chopped up in the morning, I'll come back during power hour and I'll trade then. I need to trade during the highest volume parts of the day. The more volume in the part of the day, the better it's going to be for me with the simple switch indicator in the NASDAQ. One thing I found is that every ticker has its own little personality. And I don't trade every ticker the same way. Each ticker I trade completely different because I need to trade my strategy for that ticker needs to fit the ticker's personality. Some tickers like to just stay sideways most of the time. They're more sideways than they are up or down. So I need to do something that trades, inside of a channel. Other tickers are, like to be up and down, really volatile, really fast. I need to be able to do something with that. They all move differently. There's different things that make them move, different news that affects them. Like all these different things affect tickers differently. So I have a different strategy for each one. So NQ, basically 9:30 to 10:15 I'm trading. If I get chopped up, like I said, I'll trade it later on in the afternoon. I am speed bumping NQ as well. If a speed bump happens to pop in, the success rate is much lower in NQ. It's around 73 to 75% range. I was hitting 77 in the XFA just because of discretion, but typically it's much worse than that. But with NQ, I should be able to, out of every 30 trading days, I should be able to get at least 28 green days out of NQ. So high green day rate because I can literally trade it all day. But this is part of the strategy, right? If I know I might take 4 losing trades in a day and I risk $1,000 per trade, I can blow up my day, right? I can put in timeout before all the profits come in. I do that a couple times, I start to blow up my account with a successful strategy. But if I'm risking $200 a trade and I have a rough start, I have 4 losers to start the day, I'm down $800, but then I can finish the day strong and be green at the end of the day. I just got to be able to make sure that I properly manage my position size to fit the risk that's associated with the trade, or just skip the trade if the risk is too high. Okay, so here I am with gold. Gold is a lot more complicated than NQ or the YM. So with gold, it requires me to have extra permissions. So I'm using the simple switch permission indicator to tell me when I can get in and out of, not out, but when I can get in the gold. So right here, I have a trigger. The trade is triggered. And then the permission indicator is giving me permission because my dashes are above the white line. So it's clearly above the white line. And a bonus to that is it's also ascending for this long trade. The trigger to the long side, dash above the white line, and ascending. Now I can get into this trade to the long side. And then in the same thing, I get in with the candles closing. I'm trading gold on the 5-minute chart. And then I got my target right here. To the short side, what I'm looking for on the short side is I'm looking for the dashes to be below the white line. So this over here would not be a trade because my dashes are not below the white line. Yes, it triggered. Yeah, it would have been a huge winner. But because I don't have that, it's not a trade. Now, one thing I do look at with the simple switch indicator is sometimes when there's a really big move up and an aggressive move the opposite direction that switches, a lot of times that trade turns out to be awesome. I say a lot of times, like in the high 70% range, 76% range, this is going to be a solid winner. Not the 85% range over here, but still high enough probability that I could trade that if I wanted to. But typically in a short, I'm looking for dashes below the white line. And then when I'm trading equities using this indicator, I also play in the red line comes into play as well with permission. So basically that's what's happening with gold. I have this extra dash over here. So with the trigger, I basically put 2 of them on my chart. This one has a setup with a different number. So one of the key things in having a successful strategy is having something to trade against. And this indicator is what I use. And if you're interested in looking into it, it'll be linked in the description as well. And that'll be over at simpleswitch.teachable.com. And also link in the description if you're interested in checking it out. If nothing else, to give you some ideas on something that you might want to get for yourself or create for yourself. Okay, so hopefully my account will be live next week and I'll be able to start trading. My dashboard's already up and running, but I'm still waiting to find out when my data is going to start, and just I'm not really sure how this works. So we're going to see. Maybe on Sunday night I'll be able to make my first trades. I'm not sure. But that's basically my strategies in a nutshell. In the evening session, I'm basically doing the same thing, although I may be taking the first switch, things like that. So, but yeah, basically that's all of it in a nutshell. All right, everybody, I hope that something, I hope that helped you out in some way. If you put in the comments and let me know if there's something else that you would like to see or know. I'd like to be able to share that with you, whatever it is that you might be interested in your own trading journey. If there's questions you have, maybe I can make a video about it. So yeah, so if you put that in there, that would definitely help me make content that can help you. All right, everybody, we'll see you on the next trade.